Good morning, ladies and gentlemen. Thank you for joining us today for our webinar titled Are SMEs the Next Frontier for Digital Financial Services? Special thanks to our panelists for sparing their time to be with us today and Tagit for sponsoring this webinar. Now, today's topic is an important one. Statistics indicate that SMEs represent about 39% of Malaysia's GDP and employ nearly 50% of our workforce. Yet, despite the years of touting the importance of SMEs, they still remain one of the most underserved segments in Malaysia, especially with the prolonged pandemic in Malaysia revealing the cracks in the financial services provided to them. Today's topic is very timely, and joining us to discuss this today, right on top there, we have Jeffrey Ng, who is the Managing Director for Group Community Banking at RHB. Below him, we have Swapnil, who is the Director for Business Development at Tagit. And below Swapnil, we have Khairil Abdullah, who is the CEO of Axiata Digital and also Boost as well. We have another panelist who's struggling a little bit with his connection, but he'll be joining us shortly. We have KJ Balan, who is the head of SME banking. So while we wait for KJ to log back in, maybe we can start with Jeff to kind of give us a broad sense of what's going on in this space. Jeff, maybe you can walk us through some of the broad trends that you're seeing shaping the financial services market for SMEs right now. Jeff, you have the floor. Feel free to unmute your mic. Go ahead.
Right. Hi. Thanks, Vincent, for the invite to speak today, and greetings to everyone on this session, and also my fellow panelists. Obviously, the pandemic has brought about a fair bit of disruption, right? And I think it really exposed many companies, big and small, in terms of challenges of operating your business remotely in a pandemic like this, right? So I think starting from that, I think you can see a major trend in terms of digitalizing your business, right? And we can see many institutions and also SMEs now really concentrating on seeing how we can actually run the business remotely, looking into also cloud solutions, and even banks like us, right? We are seeing how we can integrate our products and services, within the business's ecosystem to really deliver a seamless operational solutions to small businesses, right? So I would say that one major trend that is really arising right now is a focus on transactional ecosystem, which includes payments, of course.
Thank you for that, Jeff. Let's maybe quickly move on to Swapnil and then Khairil and then KJ to give us a broad sense of what they are seeing shaping this SME financial services right now. Swapnil, you have the floor. Why don't you tell us what your thoughts are?
Yeah, Vincent, thanks for having us and arranging this session, right? Thanks to FinTech News Malaysia. To me, at Tagit, there's been three broad trends that really stand out. The first one is that the nature of SME business itself is changing. There's been the rise of gig economy in the last 2 or 3 years. So ride sharing, delivery services, creative work, software development, design, those have come up. And it's so easy for anyone to start an online shop today just with a few clicks, right? That's the first observation. Second thing, the whole financial ecosystem of SMEs is also changing. So we've seen a lot of digital lenders that have come up in the last few years and catering directly to this underserved market. Then you have Facebook, Google, Amazon offering solutions for these SMEs as well. And then you have accounting companies like Xero who not just do accounting, but also offer financial services, right? So as a result of these first two trends, what has happened is the bank's attitude and approach towards MSMEs has also changed quite a bit. Until a few years ago, when it came to offering a digital solution to SMEs, people looked at it as a retail plus digital solution or a corporate light digital solution. But that's not the case anymore. So we see the conversation changing from should we focus on SMEs, have a dedicated channel for SMEs too? How do we offer the best user experience and capture this market? Definitely few defining, exciting years ahead of us.
Thank you for that, Swapnil. Let's move on to Khairil to get his views on the broad trends of things. Khairil, you have the floor.
Thank you. Thanks, Vincent, and thank you very much for asking me to join the session this morning. Very warm welcome to the audience as well as my fellow panelists. I think Jeff sort of started his answer by talking a little bit about the impact of COVID, and I think that's the context that we cannot escape from with regards to the SMEs. I think, unlike some of the larger enterprises where they have enough in their coffers to withstand, to a certain degree, some of these prolonged restrictions, if you like, in the markets. On average, most of the SMEs out there, at least according to our data, have probably about 4.9 months of cash flow to be able to sustain, kind of a prolonged lockdown. So we're starting to see a lot of these SMEs having to obviously temporarily shut because of the MCO restrictions, but also at the same time being forced to shut down. The context of all of this, obviously, is the fact that the income or the revenue has grown to close to zero for quite a number of them. But at the same time, there are substantial fixed costs or semi-variable costs that these guys still have to sustain, right? And in a climate like this, where there is sort of no give in those kind of costs, it's been very, very challenging for these guys, right? So I think if I look at what is sort of the general trend around SMEs, I don't have, if you like, the research-based answer that Tagit just gave. But what I would say is that there is a desperate need right now for SMEs for financial assistance to actually sustain their businesses going forward. Otherwise, we're going to see a lot of failures. We already have, but we're going to see even more failures in the coming months.
Thank you. All the speakers have bring up very important points that I think we will dive a bit deeper into later. But let's jump to KJ to also get his thoughts on what are some of the broad trends he's seeing in CIMB. KJ, you have the floor.
Yeah, thanks, Vincent, and thank you all for this discussion. I think it's timely and apt. Again, if you look at the reality today, this is probably as far or as close we can get into seeing a person in real, right? This is a reality. So if this is the way we are going to interact today and future, a lot of businesses are also in same situation. How do you interact with customers today? We probably will live with this kind of scenarios where we see face to face only through a digital screen. And that's the same situation the customers there are facing. You are not in the physical brick and mortar shop to sell to customers, but you have to sell. How do you get your goods to the client? How do you engage the client, right? In the past, people visit you. Now you have to touch them digitally. So this is a reality of the change. Maybe we will go back to normal 3 months, 6 months, 9 months, 1 year down the road. But this new norm is there for a long time. And probably because the fear factor will be still there for a long time, people will still want to be safe. And today, a lot of people are already used to buying online, right? And when we started in March 2020, we have a big deal, a lot of transactions online. But today, people are used to it, even to the extent that people are buying groceries, basic things from online. So I think this norm will stay. Now, with this change, what will happen at the back? Every aspects of the industry, from the sales, from the acquisition, from the delivery, from the lending, from the analysis of data behind it, everything will change to look at this new norm, and that's how the future will shape. So the biggest trend, of course, banks talk about digital banking, P2Ps, a lot of people talk about digital banking. That will happen, and that will converge. It could be, individual businesses or individual companies that's doing the P2P lending. It could be the banks that take the position of a digital lender, and it could be also the partnership. So whatever works in future, but I think the country, the industry in a stage of exploration, we all are already used to probably almost a year and a half of this new norm, and everything else that we do now until the future, we probably have to look at it. This is probably the way we will live our future and change along to that line. So I think the market is used to it, is getting to that. A lot of thoughts saying that the digitalization in Malaysia is lagging behind. But yes, we were much behind earlier, but it has come to a certain extent. And given the multiple rounds of challenges that we have gone through, I think people will change, and this trend will take take its place in future. And I think more and more aspects of our life will be digitized, not just the financial industry itself. That's my thought.
All right. Right, thank you for that, KJ. So, of course, there's a few themes from what some of the speakers are discussing, from the digitalization to the need to better serve the SMEs in terms of the financial situation and cash flow, and even the whole digital banking license, which I'm surprised Jeff and Khairil didn't talk about, since both of them are jointly bidding for one of the 5 digital banking licenses in Malaysia. But we'll maybe dive into that a little bit. I think
Vincent, we're newly married. We don't talk about what happens in the bedroom.
Don't kiss a dead, right?
It's great, I guess.
Actually, you're more engaged than married, right? You're still waiting for.
That's true. We need the official marriage license. Yeah.
We eagerly await to attend your wedding ceremony. So let's jump into one of the key points that was brought up by Khairil earlier about the dire need for SMEs right now, right? And I think it's not an understatement to say that we are in a terrible crisis at the moment. I think some estimates put it at about 40% of the SMEs shutting down by MCO 3.0 if we continue with this lockdown. So obviously, if there is a time for banks and financial services to really serve the SMEs as they would say during their press releases and press conferences, this would be the time to do so, right? So maybe we can start with Jeff. And Jeff, you can share with us your thoughts on how we can do better as an industry to better address some of these really pressing challenges that the SMEs face. And then maybe we'll go Khairil and then Swapnil and then back to KJ. Jeff, you have the floor.
Sure, of course. Yeah, so it's quite obviously after more than a year, small businesses across Malaysia is really going through some challenging times without a doubt. What banks, what institutions can do, I think obviously one of it is trying to provide enough financial resources. And there are many sources right now in terms of like government backed guarantees, right? Where you can have access to cheaper financing, right? So I think one of the objectives within RHB is to ensure that we can actually distribute all of this, and will continue to distribute this to small businesses. But we have also noticed that because of all the restrictions in the movement and all, we really need to change the way we do the delivery. We need to allow more access to remote applications, for example, right? To be able to facilitate all of this. And institutions are also put in a situation whereby we need to creatively determine a differentiated way in assessing a lot of these businesses to be able to provide them financing, right? Obviously, the pandemic has totally disrupted the traditional way of looking at things. So we would need a more creative view of doing assessments for some of these small businesses. Besides that, I would say that it has to be more than just financial assistance, right? We have seen many corporations now, not from a commercial angle, but we are providing assistance in really getting some of these small businesses up to date, right? They never thought about e-commerce before this, thinking that they have a thriving brick and mortar, totally stopped today, right? So e-commerce becomes a really key point. Many institutions, including ourselves, are running programs to make sure that they know what digital marketing is all about, how to get them on e-commerce, and even promoting on some of their behalf of these small businesses. So I believe all of these initiatives are quite important among us as an industry to really come together to support them from this perspective.
Thank you for your views, Jeff. Let's move on to Khairil. Khairil, what do you think the industry can do better to help SMEs during these trying times?
Which industry are you talking about? You're talking about the banking industry.
SME, like banking industry, and even the fintechs as well, right? I mean, it's all financial service at the end of the day.
Fair enough. And the reason why I clarified that is because, and I'll say it in reference to perhaps another market that we're in. Axiata Digital is also very, very, we have a pretty sizable operation in Indonesia as well. And obviously there, as to some extent here as well, that the banks have been woefully inadequate in serving the SME segments before the pandemic, and it's become even more pronounced now during the pandemic, right? I think before the conversation, we said we will poke holes at the guy who's not on the table here, i.e. the yellow bank, but I won't do that. I'm going to poke holes at my neighbors in Indonesia, right? So if you look at Indonesia, Malaysia has about 1 million SMEs according to, or 900,000 SMEs according to official statistics. In Indonesia, there are 60 million of them. Half of those, right, so about 30 million have been forced to shut down or slow down operation or temporarily ceased operations in throughout the pandemic. But throughout this period as well, banks have only been able to lend to 7 million out of those 60 million. P2P, peer-to-peer lenders in Indonesia is still relatively a new sector. They've, in very, very short period of time, been able to lend to the same number that the banking industry has been able to extend to, right? So I think, the challenge I do see with the industry, and now coming back to Malaysia, is that, the banks were not really equipped to start with to serve SMEs in the first place, and we can talk about a bunch of reasons for that. My main point will always be around the unit economics of a banking business model. But in a non-pandemic situation, it was already a challenge. In this situation, where you, as Jeff said, you cannot reach the SMEs, right? Then, if you don't change your distribution model, then actually your marginal cost of distribution will go up as opposed to go down, which then makes the economics of serving the SMEs become even more challenging for the banks, right? And I do think that it's actually, like you said, Vincent, the fintech players, the digital players that are the ones that are kind of going out there and helping the SMEs, and they need to, right? And to a certain extent, they too sort of need to work with the commercial banks, because they may not have, the balance sheet strength to be able to go out there and do some of the stuff that they want to do. But certainly from a reach perspective, from a credit processing perspective, they definitely do have a lot more capability to reach the SMEs in this particular point in time.
Thanks for that, Khairil. I think both you and Jeff brought up some points that I really want to unpack a bit later.
Mm-hmm.
But let's jump on to Swapnil to get his sense, and then KJ, and then we can dive back into deeper into this conversation on how we can do better for the SMEs. Swapnil, you have the floor. Do share your thoughts with us.
Thanks, Vincent. So I have spoken with a few bankers over the last 6 to 9 months about how COVID has affected their credit scoring and credit risk assessment, right? And most of them shared with me that they've lowered the tolerance level or adjusted the tolerance levels to SMEs for their financing needs. They're working with government to assist the SMEs with digital adoption. They're doing some pilots around eKYB, know your business, so as to originate the businesses and help them. A couple of things that could still change and need a bit of work is, instead of asking the question to the customer, what product are you looking for? It will be good if we can ask them, what problem can we help you solve today, right? And then that's not something we see with a lot of banks. So I think that conversation needs to change. Good example here is, we know that there's a lot of challenges around documentation, information available from the SME businesses. But then there was a recent partnership. Funding societies partnered with Food Panda to, while addressing all of these pain points, they're offering collateral-free loans, short-term financing solutions to the 30,000 odd restaurants, F&B businesses on Food Panda. And finally, we talk about digitalization a lot, but there are SMEs or people today who don't know how to do it or may not have the mindset to digitize. And right now they don't have a choice. So a lot of marketing and programs need to be run to drive awareness and adoption of this.
Thank you for that, Swapnil. Let's move on to KJ. KJ, what is your sense on how the industry can collectively do better for SMEs during these times?
Yeah, I think that there's two stages to the issue today. Given that this has been prolonged, it's undoubtedly that many of them would already have had some kind of problem even to manage their existing finances, the borrowing. So in most of our discussion and engagement with some of the industry leaders, what we advise them, let's get the house in order first, right? So you have look at the tourism industry in particular, right? They have been in doldrums for almost it's going to be 1.5 years. There's no business. There's no likely to be any business. So what do they do then? What do we tell them? So first thing, I mean, in terms of business, they got two choices. They either give up or they find a way to survive and then rebound. Because this market, especially we take an example of the travel and tours business, they will definitely rebound post-pandemic, right? But between now and then, what do they do? So our first advice normally is to let's get the house in order. You have a finance there, organize your finances, right? Work with the banks to a lot of them have applied for moratorium. Don't let it go into an unpaid non-performing loan position. That will keep your options open when the business recovers, right? So that's the first stage. Second, of course, during this period of 1.5 years, I think Jeffrey made that point earlier, we are no longer even in a position to assess them based on what they had in the past. You see, the financial statements are irrelevant today. The bank statement was a very good proxy at one point of time, but even the bank statement today becomes an issue because they are not operating, not to say because they don't want to do the business, but they are not able to operate due to the MCO. So that poses a problem to assessment. So I think as a bank, I think we are cognizant of this fact. We have to take this into consideration, these facts into consideration for them, for us to be able to allow to continue to support them. But in the first place, I think get the house in order, get the financing reorganized, restructure them so it gives them the breathing space and then they are not bothered by the current commitments to the loan. And of course, we have to relook into how we can support them. I think there's a lot of relief financing which is being rolled out by the government and the central bank. There's ample liquidity in the market. It's not a question of not being able to support the lending. But of course, the final problem, which is the key, the market needs to open back, right? Without the business able to go back into business, I think the question of you having additional borrowing will always be a challenge for the industry. And that's real. But I think these are the three stages of the process. That you get your house in order, you make sure the existing financing are restructured, and you get ready when the market rebounds. I think we have to get ready, right? In the meantime, how do you survive? I think that's the question I will advise the clients, because as I go around the town, there are businesses that has closed shop. There are businesses that are still there. They might not be doing as well as what they were doing in the past, but they are surviving. They are finding ways to get to market, as I mentioned earlier. This is the reality, right? I cannot reach my customer. I have online, I have Food Panda, I have GrabFood. I find my way to get the goods to the client. So that change is happening, and I think probably this will help the business to survive for the time being until we recovers and the market opens. I think that will then is the stage of our recovery. We have to reset, and then that will be the stage of recovery that we will go through.
Thank you for that, KJ. So now, I mean that there's a few key themes that the panelists have brought up, right? From the credit risk assessment to even the unit economics and several other very important themes in this conversation. So one thing that I kind of wanted to dive a little bit into is that at the end of the day, banks are commercial businesses, right? And the unit economics is important. Even though if you have altruistic goals to serve SMEs, it has to make sense commercially for the banks. So I guess my question is, how do we make the unit economics work better for a bank? And also, my second follow-up question would be, in terms of offering this kind of financial products and financial aids to these SMEs, how much of that process is digital right now, and how fast is the disbursement? Is it quick enough? So maybe we will just open this to the floor. Whoever want to take this question first, just unmute the mic and then I will bring them on stage. Gentlemen, who would like to go first? Jeff?
Okay.
All right, go ahead, Jeff.
All right. Maybe a couple of thoughts on this. I think for me, the industry is moving from traditionally more general kind of financing to more purpose-driven ones today, right? Because segmentation matters now. In order for you to be a lot more accurate in terms of financing a particular segment, you need to know which ecosystem they play in, the supply chain and all. So I believe we are moving to a more segment-based approach, and every segment that we are actually focusing on needs a totally separate and customized, lending to them, right? With that, then we would be able to speed up certain segments such as small business lending. That would be one. So we would need a differentiated approach. Obviously, the other one is basically the distribution itself. Like if you use your so-called traditional methods of always depending on a relationship point of sale, then it's going to be really difficult to reach out to the masses. And then therefore, this is where digital banking actually comes into play. And for me, it is crucial for banks like ourselves to start evolving quickly to a model that is able to serve the masses digitally. So that would be my opinion on the two approaches.
Thank you. Would any of the other panelists like to add to the
maybe
question?
if we can jump in.
Go ahead, Khairil.
And I think I kind of touched upon it a little bit in the answer to my previous question, the previous question as well. So obviously, being a digital startup, and in fact, all the startups that we've kind of created within the Axiata digital family, we have a maniacal focus on unit economics, and we link that to effectively the business model that we've created to solve whatever customer pain points that we're aspiring to go solve, right? And so and we start out with this model where can our business model generate positive unit economics, right? And I think from day one, we sort of looked at the introduction of digital technology to break the model such that the unit economics drives down to sort of as positive as we possibly can imagine. And I think Jeff touched on a few things already. One is that I think you may have seen this in our previous conversations as well. Our marginal cost of distribution is close to zero. In some cases, it is zero because it's going through a 100% digital format. So I don't need to actually incur any distribution cost per se. If you like, the underwriting score or our credit processing, the marginal cost of that is also close to zero because it is a 100% digital process. You punch if you like the information into the computer will either say yes or no. It is this the credit score, the machine learning credit score engine that we built. So therefore, the marginal cost is pretty much zero. So the only two costs that we actually have to worry about is our cost of funds and our NPLs, right? And if we get our credit scoring engine correct, then our NPLs should sort of fare pretty well. And then the last thing is sort of cost of funds, and part of the reason why we're applying for the digital banking license is because we really want to massively drive down our cost of funds, right? We're sitting on the one hand with massive deposits on the Boost side, right, our wallet, but I can't touch that for lending because we're not licensed to do so. But once we are able to do that, then it changes the economics of the business even more. So for us, unit economics has always kind of been the key, but it's really now for us competing against incumbents. I think incumbents will find it a little bit of a struggle to lend to. So maybe kind of take a step back a little bit. Part of the conversation, what I'm hearing, and maybe this is a little bit from Jeff and from Balan, is I get the sense that we're talking about very different types of SMEs here. So a lot of what I talk about is the micro segment. These are people who have an annual income of less than 300,000 ringgit, very small organizations, 3 to 5 employees at most. When I heard Balan talked about kind of getting their shop in order, I'm sort of struggling a little bit to understand what do they need to sort of practically do, because it's actually a very small operation. They have a very streamlined business, i.e. they buy goods, they cook, or they turn those goods into things that they can sell, and then they make an income for that. Generally speaking, they don't borrow money at all. In fact, 40% of the people we lend to have never ever sort of borrowed money from anyone. The remaining 60% have borrowed from a combination of family and friends and loan sharks, right? But generally, very, very few would have ever been successful in getting a bank loan. And so because of that, there's not much that they can do to kind of get their shop in order, right? So I think we're talking a little bit about different things. My focus is actually on the micro SMEs, because they have very, very little financial they don't have a treasury to help them weather the storm, right? And so that's the one that kind of they need a lot of help. They need a lot of support. It's too bad that banks and Jeff's team, they're sort of moving towards a very digital onboarding process, a very digital distribution process, and we've seen them do quite a number of exciting things. But I think for the most part, a lot of the banks have been slow at this. It's not moving at the pace, and I think the pandemic is sort of exposing that, and therefore it's really down to kind of the fintechs of the world to sort of step up to the plate and see what we can do to kind of help get the money that they desperately need right now.
That's some good points, right? Because at the end of the day, if we look at the SMEs market, it's not a whole monolithic segment. There are different needs and different financial circumstances which needs to be treated differently as well. So those are some important points to be brought up. Even some of the people in the audience are asking about the challenges in terms of reaching specifically to the micro segment of the SMEs, right? But before we jump into that, I think Swapnil wanted to add to the conversation. Swapnil, what are your thoughts about the questions we brought up?
Yeah, no, I think Jeff earlier hit the nail right on the head, right? Talking about the differentiated approach, because no two SMEs are same. Heck, no two coffee shops are same, right? They could have different, some SMEs are resource intensive, some SMEs are tech intensive. The key here is you have so many digital tools available, help deliver meaningful content. So as an example, if I'm running a coffee shop, I just don't want to know about how generally F&B is doing in the region. I really want to know coffee shops with an annual turnover of less than, example, 500,000 ringgit or 200,000 ringgit. How are they doing? Or even Malaysia, because it is such a big country, within different regions, what is happening really, right? A good example of this is, DBS has been doing this for years. They have a service called Business Class, and they deliver personalized insights to each and every SME as is required and help them network and connect with the relevant players. Even at Tagit, while we work with a lot of banks, through our notifications engine, we look at hyper-personalization to really deliver meaningful and useful content to the SME so that these micro can become small, small can go to medium, medium can eventually graduate to being a larger corporation.
Thank you for that, Swapnil. So let's move on to the conversation about serving the micro SMEs, right? And there's one question from the audience, yes, Sue-Ann, who's asking, what are some of the barriers that's actually preventing institutions, particularly, I guess she's referring to banks in terms of reaching micro SMEs. And I recall, during the announcement by Axiata and RHB that you guys are going into a digital banking bit, I think RHB specifically mentioned that one of the challenge is that for banks like RHB, they don't have direct access to some of these markets, right? So what is the challenge there? And if that's the case, how do banks look at solving this beyond getting a digital banking license? So maybe we will get Jeff to answer that first. Jeff, what's your thoughts on this?
Okay, so if you really look into micro and small, right, I suppose the challenge here is that if you had enough information, you can actually do a fairly good assessment and pretty much support some of these businesses. So I think the challenge here for banks is that not every institution predominantly has access to a lot of this information. So therefore, in this day and age, right, collaboration makes a lot of sense, especially with partners that are already fully embedded in such ecosystem. So that's why I have raised the subject of ecosystem play quite a fair bit of times, because that is probably the way where we can start to differentiate the way we do our offerings, start to differentiate the way we do assessments when we are fully embedded within the day-to-day running of businesses. Right. Yeah.
Thank you for that, Jeff. So maybe we'll move on to Balan to kind of share his views. I think, Balan, you might have kind of had some trouble with your connection a little bit. So let me just repeat the question. This question here is from Suen. Suen is asking, what are some of the barriers that's preventing, organizations like CIMB to reach out and support micro SMEs? And one point I brought up was like, even RHB was saying during their digital banking bit, it's very difficult for them to have access to that market, right? So can banks overcome this issue, or do banks need to address it by joining a digital banking bit, or maybe like CIMB where you have Touch and Go, who also has a lending service as well? So is there an approach that banks can do internally to better serve this market beyond these approaches?
Yeah, so I want to allude to the point that Khairil mentioned just now about most of the micro SMEs don't even have access to lending, right? And that's true. If you look at the stats, it's about 42% of the businesses that are having borrowing relationship. But again, to my point of getting the house in order, most of the small businesses, the last thing in their mind is managing their finance, right? They are just maybe a husband and a wife, pop and mom shop. They got time only to run their business. Very in our journey with them, when we talk to them about the financial literacy, why is it important for them to spend some time in a week for them to look at their finances? This is where we find the gap. And we spend a lot of time training them in doing this. While you run the business, yes, you look at the sales, you look at the collection, also look at the finance, because your growth, if you are projecting that you will grow in next few months, the sales is coming. If you want to do 11 sales, what are you doing in order to prepare your businesses in terms of having sufficient capital for you to take advantage of that? So this is where some of the smaller businesses do not have that capacity. As Khairil mentioned, they don't have financial controller, they don't have people advising them. So we take some efforts in terms of educating them why we need, but we might not be able to touch all of them. So fair enough, the market is big enough for the P2P players, the digital lenders, for all of them to be there, because the need is huge. So as far as the banks are concerned, we come to the point of the unit economics that you mentioned just now. You see, the difference is you serve different segment of economic businesses in the whole of SME cycle, right? When you talk about SME, the definition is all the way up to 50 million turnover. A company with 50 million turnover doesn't need any help from anybody. If they can survive on their own, right? But at the bottom there's underbank, there's retail small SMEs, there's middle market, there is business banking, there's large corporates. So most banks are already in the direction of organizing themselves so that they can serve each of these segments better. Of course, the development into the lower end of the segment, particularly the micro and the small businesses, has been much more rapid in the last 4 to 5 years. I think that fact has been recognized by most of the banks. And a lot of them are working towards that. You can see a lot of banks are already onto their digital lending. Some started as online submission, but there's full straight to process for digital lending. So the banks will be there together with the non-banks in terms of the lending to the smaller SMEs. And I believe this market is big enough for more people to be in there. And it's okay if there are many players there. I think the needs are there and it's not been served for many years. So I think it's a good development for the P2P or the non-bank players to be there together with the bank.
Thank you for that, Balan. Let me reframe the question to Khairil from a more fintech kind of perspective, right? And I think if banks were able to effectively tap into the SME market or effectively serve this market, there wouldn't be a need for SE to come up with a P2P lending framework or BNM to focus on the digital banking license to specifically look at SMEs and underserved. So, in your view, Khairil, are banks not suited to address this market? If so, why so?
Again, unit economics, right? It's the business model that engenders a unit economic structure that makes it completely unprofitable for them to serve the micro SMEs, right? And the example that Balan gave about kind of the education process and whatnot, obviously there will be a cost incurred, and the financial controller within CIMB will also the management accounting team within CIMB will probably want to apportion that into, if you like, the costs of serving these micro SMEs, right? The challenge is that you're talking about, sort of sub 5,000 ringgit loan, right? Maybe it's even just 1,000 ringgit because these are really small organizations. All they're looking for is some working capital assistance to buy more rice, to buy more eggs, to buy whatever, right? To kind of do more stuff. If you look at that, whatever sort of net interest margin that you apply to a 1,000 ringgit loan, it's still going to be small in an absolute sense, and it's going to be impossible to cover some of the fixed cost structures that a typical bank will have in their operating in the business model. And so that's why fintechs have a little bit of an advantage here because of zero legacy, if you can call it that. We don't have branches. We don't have branch offices. We don't, there's just no there's just no sort of fixed costs or even sort of semi-variable costs along the process. And that's why, their unit economics, at least on the cost side, the marginal costs of distributing those loans, the marginal cost of processing those loans, those tend to be zero. So to go back to your question again, I think banks will struggle largely because they do have those sort of legacy infrastructures that makes it very, very difficult for them to do the kind of lending that a lot of the P2P lenders, a lot of the fintech lenders actually have the capabilities to do, right? So, I think banks would love it if all they have to worry about is just the NPLs and the cost of funds, right? But unfortunately, they are encumbered with a credit processing process that actually is not free, and obviously the distribution cost that is also not free.
Thank you for that, Khairil. Would any of the bankers like to respond to Khairil's statements?
Yeah, you're trying to be provocative, aren't you, Vincent?
That's where half the fun is, Khairil.
Yeah, we'll turn into a Jerry Springer session in a short while, Vincent.
That was the whole idea. You caught me there.
So, Vincent, my point is this, right? I think
sure, okay.
The development is good for the market, right? P2P or even any other form of lending for the small. I think Khairil's right. I mean, for a 5,000 loan, current infrastructure might not be feasible for us to serve that market. But I think people recognize this is a need for the country, and therefore the effort has to be there to address these issues. And again, the point is unit economics, right? I think if that is addressed, and then that will be the opportunity for the banks as well as the non-banks institution to serve the market. Question is, do you have a business model that will be able to address that the feasibility of running that business, right? In terms of educating the public, I think it is a necessity because it's not just the very small businesses that are having that issues. Even some of the mid-sized business are having that problems, I would say. But that's the responsibility, I think, for us to work as an industry to help the better the public or the industries are, if they're aware, then I think it will be better for the bank in terms of the growth opportunities and addressing the issues that are there today. And even digitization, right? 2 years ago, we wouldn't have sessions, webinars or training session on digitization with the SMEs, right? Our focus was on financing, our focus was on how to manage the finance. But today, the focus, the training by the banks are also shifted, recognizing that the customers are going to be different. The business model that they are going to go through are different. The business model that we are going to have to serve them is going to be different. So it's a whole lot of change, right? And we have to just jump into it and work along with the industry and as well as the customers to fit into the cycle. So I think it will be a good development for the industry as a whole for the next 5 years. And somehow, I think this will converge in next couple of years. Whoever learns faster will be there.
Okay, thank you. Yes, Swapnil, go ahead.
Khairil joked earlier about the new marriage between Axiata and RHB, right? So in my view, and I see this as a former banker, we'll see more people dating each other, more banks dating the fintech players, or getting married, getting digital licenses, definitely. Because we have some 875,000 registered SMEs. A lot of the SMEs, especially the micro ones, don't even register their business, right? They're funding the business from their own funds, paying salaries to their 2, 3, 5 employees directly from their personal businesses. So it is in our interest, in the interest of the financial health of the country, to get them registered. And 5,000 ringgit loan may not make sense as a standalone loan to a bank. But when you add up the entire potential of these minimum 900,000 registered SMEs, plus the informal ones, you look at the pie, that's obviously much bigger, especially because under My Digital initiative by the government of Malaysia, there's a huge drive to digitize all these SMEs. So the pie is going to get bigger, and we'll see more people dating and getting married, which will benefit this industry.
All these fun analogies coming out. Yes, Jeff, you want to add
just
something?
going to echo what has been said. I think having new players in definitely is beneficial to the industry as a whole. The reality here is obviously it is a lot more challenging for the micro and small businesses to obviously that segment is less addressed today. And I feel that these players is about, when you put it into perspective, right, it's really about segmentation, it's really about life cycle, isn't it? Because I feel that the new players will actually then complement the growth of businesses, right? And we've got different players that play really in different life cycles and segments, and really it complements the whole progress of businesses in general. Can banks actually address the smaller to micro as time moves on? I would say absolutely, right? If you really look at banks embarking on, say, API banking, and we have a few active APIs today. We are linked to accounting software providers, we're linked to POS providers, and payrolls, and so on and so forth. So as banks start to progress into API banking and gets connected with different partners, as was said earlier on, right? You have access to a lot more information, and with that, you'll be able to serve a particular segment a lot better than where you are today.
All right, thank you for that, Jeff. So later, I kind of want to jump into the impact of P2P lending and digital banking on incumbent banks. But maybe while we still have Jeff on the floor, just a very quick question to address from JB over here. So JB is asking, how much do you rely on eKYC services for businesses, and how fast can the loans be approved in general? Maybe Jeff can quickly let us know, and then maybe Balan can also share what's it like in CIMB as well.
Great. Okay. So we are at its infancy today. Can a SME or small business apply for a financing remotely? The answer is yes for us, right? And we actually have incorporated in things technology like facial recognition and even remote interviews with geotagging, so that literally a business don't have to come into RHB to get financing, right? But we are really at the infancy in terms of this. What really needs for this to grow is an ability to really do an end-to-end customer journey. And for us to do this truly end-to-end customer journey, it not only needs the bank, right? I think it also needs regulation to be in place. Access to national databases and ability to some processes today still requires wet ink, by the way, right? So it's a broken process today. So if we really want a truly end-to-end journey, it's not only a bank and technology, but it also requires regulations to come in as well.
Thank you for that, Jeff. Balan, would you like to quickly address that question from JB?
If you ask whether we are lending 2,000 ringgit, 5,000 ringgit, yes, we are. and there's already a straight-through process for the clients to apply for this small business loan. Of course, this has been only about a year, and of course, this will grow. And I think to the point Jeff made, that yes, not 100% of the process will be straight through, but for these small lendings, it's already been there, and it's been I think quite a portion has been disbursed, and it has been coming through. So the question now is, how do you scale up, right? I think that's the point market is looking at now. How do you scale up? I think the stage where we try, we pilot, we test, we have gone through that phase, and now the question is, how do you scale up to cater the wider need? This maybe the micro itself is about 70% of these countries, right? How do you scale up to that particular to be? So it's a stage of development. Yes, I think it will grow, and we will definitely address this needs of this segment. And the cost will make sense if you get the scale right? I think so that's the point. It is a journey for us. So I think sure that's something that we will definitely strive to achieve.
Thank you.
Vincent,
for
we
that,
didn't get the answer.
Yes.
Vincent. JB's
Yes.
question in terms of how long it takes to get the loan approved. We didn't get the answer.
The
I'm curious.
disbursement within 48 hours.
The approval time.
Yeah, disbursement. We are talking about disbursement, right?
So from the time someone applies to the loan to the time that they get the loan,
get the money.
is 48
for micro,
hours.
there's no point talking about approval, right? It's when you get the money on hand, right? So if you look at I think the other local bank also, I think their disbursement was also within 24 hours or 48 hours. I think that's that is the mission, right? You want to get the money to them within 24 hours or 40. I think we started this because Alibaba has this 3210, no human intervention and immediate disbursement. I think we are not there yet, but I of course we as long as you can get it within 24 hours or 48 hours, I think as far as the businesses, to them that is palatable. So you don't have to be immediate today, but 48 hours is for small loans.
So certainly the micro SMEs we talk to, they're very concerned around knowing when they're going to, whether this loan has been approved, right? Because obviously, they're not just going to be looking at CIMB, they'll look at RHB, they'll look at some of the others. CGC has a portal called iMSME, that seems to be another sort of source for them, right? So as they're doing the application, they want to know how quickly have they been approved for the loan. And then once they're approved, then it's actually, at least in our experience talking to the micro SMEs, they don't necessarily need the money to be immediate. They need to know whether they've been approved for the loan so that they don't have to worry about it and they can go back to doing their business, right? And so that's, I think JB's question is a very apt one, right? How much of our industry-wide banking sector is able to cater to the needs of those micro SMEs in giving them very quick answers to their loan application, right?
Yeah. So I think that's really a key point to note in terms of customer journey for digital applications. We have to ensure that all the statuses can have, the applicants can have access to their status at any point in time. I think that's really key, and that's what we try to focus on. Because you just want to know what happens rather than your application going into Twilight Zone and not come out, right? So I think having the status update is important. Now, there can be no one answer how fast can you really approve and disperse, right? Because again, I would say that most institutions practice a differentiated approach, meaning here that obviously, if you are existing bank customer and there are records, so obviously modelings can make the approval a lot easier, and obviously for that segment it's going to be faster. But obviously, if you're new to the bank would then go through an assessment. But I would say that in general, small businesses can have access to their financing, right, within a week in general.
So it sounds like it ranges from 48 hours to a week. I guess that's something that maybe the industry can look into. But KJ, what is the general sense over there? Because Khairil was asking about the whole status, right? Do they know the status quite quickly, whether the loan is approved, or does it take a bit of time?
Yeah, so if you look at the smaller loans, the one that Khairil mentioned, right, the one that's 5,000 ringgit and below, this is for the very small micro. I think that is almost, as I mentioned, is within 48 hours. But you look at some of the larger loans, 2 million, 3 million loan, that's within 2 weeks. Most banks are able to give a response to the customers. It's responding in the sense that give them a letter offer to say that the loan has been approved, or if it's not approved, to notify them it's not approved. And that decision to decline is also mandated by Bank Negara, that we have to, in writing, give the reply to customers. So the client, of course, the customers have a right to know whether the loan is approved or rejected within the 14 days that the industry has agreed. I think that is adhered by all the banks, right? So I think that's the maximum time frame that's given. Of course, the larger mid-market SMEs, I think that's slightly different, can be later, but generally industry acceptance is about 14 days for approval of loans. Approval or a decision to be given.
All right, thanks for that, Balan. So before I move on to the next topic, is there any other comments from the floor?
I just want to say that the benchmark has to be instant, right? The approval notification has to be instant. I know that banks, kind of have a journey to do that, and I completely empathize with Jeff's point about regulation as well. I am encouraged by what I've seen by Bank Negara so far. I think they do want to push the boundaries around the innovation because they've seen some of the models that are out there globally. But the benchmark is instant, right? Like the minute I hit enter, I know whether my loan's been approved, right? We've achieved that, but we alone cannot solve the SME needs throughout this whole country, and we need, kind of several of the banks to kind of also do their part as well, right? But again, the benchmark it's instant approval.
Okay, that's quite a benchmark to achieve, and I look forward to seeing that when you guys set up a digital bank with RHB for the instant approval. But yeah, that's definitely something that I think the SMEs would appreciate. I mean, in the digital age, everything is instant these days, right? So I guess in that sense, that expectation would also be carried on to financial services. Now, we've unfortunately run short of time, but I do enjoy this conversation where we have a little bit of a back and forth, but we didn't devolve into Jerry Springer or anything. So before we close the session, I think some of the things that's been brought up is that there are still some challenges and some barriers from a regulatory viewpoint, from an infrastructure viewpoint. So maybe I'd like to invite the panelists to talk about what are some of these barriers and what do we hope to see in the next few years to have it resolved, and maybe it's just some closing thoughts that you would like to share with our audience. So we start with Swapnil, Jeff, Balan, and then Khairil. Swapnil, go ahead. You have the floor.
Thanks, Vincent. So I think in terms of improvement, right, to better serve these SMEs, probably one thing that can happen, because we're seeing a lot of digital lenders, P2P lenders come up, and they all have different data sources. So it may lead to information asymmetry due to different data sources. So it will be good if there could be a certain standard of the minimum data sources required before a credit score is calculated and you make a decision on the approval or rejection of the customer, right? That's one improvement I think I'd like to see. What I see happening in the short term and midterm future is definitely we're going to see more marketplaces evolve because banking, although critical, is just one component of a SME business life cycle, right? And everyone gets that. So we'll see marketplaces evolve where car dealerships, travel, etc., all of them coming together and SMEs being able to network, sell, and profit from each other. The final thing that we'll also see is digital ecosystems come up. So banking, and then along with the other things that are required by SMEs, which is HR solutions, payroll, accounting, messaging, productivity, all of these, the boundaries between these components will definitely blur. That's my observation.
Thank you for that, Swapnil. Let's move on to Jeff for some closing thoughts and some of the infrastructure regulatory kind of environment that you think needs to be improved to fix this situation. Jeff, you have the floor.
Sure. All right. Yeah, thanks. So, it would take effort and collaboration from all stakeholders, whether you're fintech players, whether you're incumbent financial institutions, or even regulators and governments to come together to really develop this. And without a doubt, digital is the way to go, right? We spoke about unit costs, and the only way to actually address the commerce bit of things is actually to go digital, so that it becomes more equitable and there'll be better and wider participants in all of these things. What I would really love to look for is a building of a national infrastructure, for example, in terms of data sharing. I think that's really key. Digital itself is just a tool. Without an infrastructure of information to support it, frankly, it's not going to be that efficient. That would be one of the asks that I have. From a regulatory perspective, we spoke about collaboration, right? So collaboration with technology players and even fintechs and digital banks is going to be the thing for the future. So having a standardized and formal framework in terms of, say, API management, it's really key. We can see all of these developments in Singapore. They've got their Sing FinTech up recently, I think, and they've got a framework up for API. So I would really love to see development in this space. And I believe that if all of these things come together over the next couple of years quickly, we can see really a lot of progress, especially in the space of supporting the SMEs.
Thank you, Jeff. And Balan, what are your thoughts in terms of
I
regulatory
think
environment
to
infrastructure?
Jeff's point in terms of overall industry moving forward on this, if you look at the scenario, the transformation, the digitization that happened in the last 1 year, 1.5 years, is so much more compared to what happened in any previous transformation in the last 10 years when it comes to digitization. So the regulators doesn't have to push, right? The industry, the way it's shaped up, has pushed everybody to work towards digitizing the way they operate, digitizing the business, digitizing the delivery. It happens because this industry push. And of course, as far as the regulators and the request from the MOF, or for that matter, the industry, is for things to move forward, to improve, yes, customer journey. And I see everything is moving in that direction. The question is that fast enough, or do we need to be faster? And I would say, yes, we need to be faster, right? And that's the way probably we have to shape ourselves moving forward.
But any wish list in terms of regulatory initiatives?
I think regulatory is very supportive in this country. In fact, they don't stop the banks from doing any kind of partnership, right? So I think the flexibility is there. We must work with the partners to prove that the models are viable. And I think the support is there. So I wouldn't say regulatory is a challenge, but because remember, this industry has a lot of sensitive information. So it's very different from non-bank industries, right? You have a better, much more freedom in terms of space. So I think within that boundary, we need to reinvent ourselves and to be relevant to the SMEs. I think that's the point, right? We got to be there for the SMEs.
All right, thank you, Balan. And Khairil, what are your final thoughts on this?
Sure. Let me start with answering one of your questions first. Regulatory ask, right? I would say, given that we operate in a couple of countries around the region, a few countries around the region, that actually I'm very encouraged by what we're seeing with Bank Negara. Obviously we have constant dialogues with them to continue to push the boundaries. But in the interactions that we've had with them for the last, I want to say, 3 years or so now, topics that were once alien or taboo are now kind of completely in the realms of possibilities, right? Things like cloud, things like APIs, things like sort of a light core banking system, sort of a documentless algorithmic lending. Those are all now within the realms of possibilities. So I would say that the ask from the regulator is continue on the path that you're pursuing with regards to innovation. Obviously, they'll have to balance risk versus sort of innovation to kind of create more opportunities and businesses. More opportunities for the SMEs, right? But maybe kind of as a closing statement, Vincent, when I tend to be quite provocative and quite controversial. I'm relatively well behaved today. I don't know why. Maybe because Jeff is around, and we have to sort of be nice to Jeff. But my mantra, if you like, is like, Axiata Digital, we are relatively a small organization. We don't have the might of the collective industry. And so I will always push the same message, right? In the sense that, we need to keep innovating. We need to keep pushing the boundaries in order to be able to serve the SMEs, which you've kind of rightfully called as the next frontier. The problem is in this current day and age, we probably need to move a heck of a lot faster. If not, you'll see more and more of these SMEs throwing the white flag and maybe jumping off a bridge, which is something that we don't want to see happen in our country, right? So if you like, that's my final message. We cannot do it all. We need RHB, we need CIMB, we need Maybank, and obviously we need the regulators as well to sort of do their part, such that at this point in time, under the context of a very, very challenging COVID-19 situation, that help is there for these guys to continue to survive.
For sure, I think there's a few quite salient points over there, and I think at the end of the day, different players have different roles to play in different parts of the value chain. So if P2P players and micro lending players are more suited for micro SMEs, so be it. If banks are more suitable for medium-sized, larger enterprises, so be it. But collectively, I guess there should be, as Swapnil said, right, a little bit more dating, a little bit more marriages between these institutions to better serve the SMEs. Now, we are in truly a challenging time. And I do hope that the SMEs and the employees of these SMEs can pull through this really difficult period of history that we're having and emerge stronger. Now, if there's nothing else from the panelists, I would like to now close the session and thank everyone for... Yes. Oh, yes, Swapnil, go ahead.
No, I'll just make one final joke. So there's going to be a lot of, as I said, dating and marriages between banks and fintech players, and companies like Tagit will make the whole dating and marriage process easier.
So are you going to be the Tinder for them, or?
Well, if that's what makes it easy, sure, why not?
Okay, very cool. Thanks for that, Swapnil. So with that, it only leaves me to thank all the panelists for joining us today and sharing their views. And all of you guys for tuning in to listen to us. And I apologize for some of you who are tuning in on YouTube who are struggling a little bit with the lagging. When we put up the replay, it should be all smooth. And again, thanks for tuning in and hope to see you guys again soon. Take care now. Bye-bye.